I don't like to lose money on any of the trades. If I close a trade with a loss, it's only as part of a group close because I've reached my target, cleaning the slate. And when I close those, I'm ahead of the game. If I didn't do that, I would have a 100% trade success ratio. All right, so let's try to find some trades here. So when you're first starting, you have to wait until the master trend is established, or if the trend is established, you have to wait for a signal. Let's just start over here. Let's just start on the left side of the chart and move to the right. And as we see, we're watching the master trend. So the master trend is changing from red to green. You see this green arrow. And now at this point, you are ready to enter a trade. But the best time to enter a trade, because by this time, the market has already moved up a little bit, and markets have a tendency to retrace unless they rip. If they rip, that's a completely different scenario. If you feel the market is really running, then you can enter a trade the moment the master trend changes, if it changes to green or whatever color. But typically a conservative way is to wait for the master trend to change and then enter when on one of the subtrends the color will change. So when the market first changes trends and becomes an uptrend on the master trend, then as you can tell, if you can see my line, the fast trend at that moment is red. So the master trend is changing to green, the intermediate trend is green, but the fast trend is red exactly at that point. As soon as the fast trend changes to green, that is your entry point. And you stay into that trend until the one of the colors, any color, changes to red. If the color changes to red, or when the color changes to red, and you're in a long trade and you have a profit on that trade, you take the profit. If you do not have a profit yet, you do nothing, right? So again, wait until the master trend changes and then wait for a signal from one of the sub trends. Unless the market is ripping, then you can enter. But most of the times you will wait for a signal from one of the sub trends, because when the sub trend gives you a signal, that means that the market has retraced from the time where it gave you the signal on the master trend and is zooming the move in the direction of the master trend. That's always a better time to get in, safer place to get in, right? Now, when one of the colors changes again on the one of the sub trends and you have a profit, take the profit. There's no reason not to take the profit when the trend changes on one of the sub trends. If you take the profit and the market continues in the original direction, guess the chart where you took the profit will resume the move in the original direction, and you will get another signal soon to re-enter, and you will re-enter the trade. So at this point, you are still flat. Let's go over this again. You've entered a trade at this point, right at 11:12, where this trend changes right after this vertical red line right here as my cursor or as my crosshair is pointing, right? So that's your entry. The market is moving up at right about 12:36. You get a signal to get out. Graph, very slim, thin line. Nevertheless, it's a red line. You don't see into the future. When the trend changes, when the color changes, you don't know how long that color is going to be, or is it going to be short. If you have a profit, get out. Let's just assume you had a little bit of a profit. You got out. doesn't matter what it is, but you're entering right, you will re-enter right back in here. But before we get to that point, you have two red trend changes on the intermediate and on the fast trend. The colors have changed at the same time. If you are not flat, in other words, if you did not take a profit, then if the trend on both subcharts had changed in the opposite direction of the master trend, then you hedge your existing trend. In other words, if you have a profit, you take the profit when the trend changes on any of the subcharts. If you do not have a profit, you do nothing. But then if the trend changes on the other subcharts, you immediately hedge, because you don't know if the trend is not going to change or not, right? And as we see in this instance, the market has gone down a little bit until in 29, which you can see right here. On the fast trend, the market changes back to the long side. In other words, back to the upside. At that point, same as in the situation, you've got a hedge trade. The hedge trade, which is open at the same time, if there's a profit on it, you close that hedge trade out. There's a profit on it, you close that hedge trade out. Simple as that. If the hedge trade is not in profit, you do nothing. You only take profit on profitable trades. You do not close losing trades, because those trades are only losing temporarily. You hedge them. If you start losses on every trade that you have a loss on, you'll be just taking losses and wipe out your account. That's why they invented stop losses. No professional trader uses stop losses. Nobody takes a position in, say, Microsoft for $5 billion. No professional fund does that. And then they say, well, if the market moves $5 against us over here, we're just gonna dump out. No, markets go up, they go down, they go up, they go down. That's why you trade with a very, very small position, so that you can withstand a temporary market move against you. And you'll see how that will come into play in just a little bit. So rule number one, 3%, maximum 3% risk. Number two, you will be net long only if the master trend is green. You will be net short only if the master trend is red. You take the first trade when one of the subtrend changes color to the same color with the master trend. You take profit every time one of the subtrend changes color. If both subtrends are in the opposite color as color from the master trend, and you have a trade that is not in profit, you hedge. If you do have a profit, you should have already closed out of that trade at the time that one of the colors on one of the subtrends changed. Okay, so far you hedge here. You hedge when the second subtrend changes color. You take profit when the first subtrend changes color. If you have profit. If you don't have profit, let it ride, because the chances are the first trend that changed was the fast trend. That's why it's called fast. You take fast profits there. If you do not have a profit, you let it ride, because the chances are it's just a small retracement and it will continue. However, if the intermediate trend changes as well, that's when you hedge. Right at 1236, you hedge. Okay, you follow the chart, and now on the fast trend at 29, the trend changes. By now, the chances are that you have some profit on that hedge trade that you entered in at 1251. I'm sorry, 1236. 1236, you entered a hedge trade and right around 29, you exit that hedge trade if you're in profit. If you're not in profit, let it ride. Now you're flat. You have the initial trade that you opened at the beginning of the trend that you didn't have a profit yet, but there was a little chopping, and that choppiness made you get into a hedge. Okay, no big deal. Now we're hedged. When we're hedged, because we had to deal with a little bit of choppiness. When we're hedged, that means we're flat. We will enter a new trade only when the intermediate trend changes into the same direction as the master trend. And that would happen in this situation, it would happen right at around 1339. So
Okay.
not long after you got out of the hedge trade, if you had a profit on it, because the fast trend changed into the color of the master trend. Then if, however, you didn't have a profit and now you're flat with a master trade and a hedge trade, then you enter a new trade, second master trade in 39, because that's where the intermediate color changes back into the direction of the master trend.
Mhm.
At this point, and remember, you're trading very, very small positions, right? Small positions, so that you can have more of them. You can play with them. You can dollar cost average them. If you get in at a low price and next at a high price, your cost basis is somewhere in the middle. A lot easier to recover from that, right? Especially when the trend starts going in your direction. Okay, so now you're back long, right? But shortly after you're back long on the fast trend at roughly about 1357, red color changes again. Now what do? You look at your two long trades. Are any of them in profit? If any of them are, take the profit. If one of them are, well, if both of them are, take the bigger profit. If one of them are, take the profit. Now you're flat again, right? Now you're flat again, but guess what? Not for long. Not for long, because right here at 7:30, well, which is a little later, this is the next day, right? The next day on the open, guess what? Market jump, you're long again. And you're gonna ride this a little bit, ride it. There's a thin little line. If you want to eliminate these lines, if you look at this chart, before I would start trading, I would look in the past, and this is how I kind of optimize my chart. But this bottom chart, and this I'm gonna show you over here. I will go over here into my strategy settings, and I will change this fast trend. I'll change it to say 120 instead of 100. I'll add 20 more ticks to it. All right, here we are. So there's a fewer of those. See, not as many. So we actually found a better setting here with the 20 added. So anyway, here we are 7:30. We got back in the trade, and right here at 7:57, the color changes on the fast trend. We take the profit. I promise you there's profit here. So now we're flat again, but not for long, because 8:02, you get right back in, and you're gonna ride till 9:23. At this point, obviously, both of your original trade will be way in profit. Guess what? You're gonna close that trade. Close that bigger profit. You're gonna take the bigger profit, and the market is going to go, and over here you've got both colors red. What does that mean? That you should be hedged. You should be, right? But you already are flat at this point, right? because you already have a hedge trade from way before. You're carrying it. You're gonna make money on it. Close your bigger profit, but you're gonna carry that hedge trade. It's dead weight right now, but it has to be dead weight in order for the strategy to work. If it wasn't a dead weight, we'd have to take a loss. I don't like taking losses, man. I just don't, because then I have loss here, loss there. I mean, the markets do this. I'd have losses everywhere. But guess what? I only have temporary losses. My success rate on open and close trades is over 90%. Like this month, I'm sitting at 91%. Do you know how many of those trades I was underwater with? How many of those trades that are 90% winning trades, you know how many of them were in the roughly 80%? Now, if I had closed those 80%, like most people do, because they've been taught to use stop losses, which is the biggest fallacy, biggest stupidity. If you have to trade with stop losses, get out of trading. You have no business trading if you have to use stop losses. That's not business for you, because I promise you, you will wipe out your account. It's just a matter, not if, when. Guaranteed 100% every time. It's like a casino. You know, you might be up for a little while, but you stay in there long enough, you're going to leave all your money and then some, because stop losses are designed to do that. See, it's a zero net game. If somebody wins, somebody has to lose. The big boys don't want to lose. They don't like to lose. I don't like to lose. That's why I don't like stop losses. I won't ever use them. Never, never, never. I used to lose money like all the time, used to wipe out accounts because I was using stop losses. Now I hedge my position. I hedge them, because it's just a matter of time before that hedge becomes a profit again. That hedge will one moment become the master trade. So getting back right here, you're hedged, but not for long, because right here you get back in. 10:59, you get back in, you've got it, you're +1, you're one long, right? And then that gets confirmed on the intermediate trade, turns green 11:05. You see that, right? 11:05, and then 11:22, we're out. Now I'm telling you, you're going to have a profitable trade, because you're carrying a profitable trade that was hedging, that was being the opposite of your first hedge trade from way before. And even though maybe this last trade is not profitable, but the one from before it, and you're gonna take the profit right here. You're taking the profit here. So you basically, you were supposed to be hedged right here, but you already are hedged. So you didn't have to put on a hedge trade. When the color changed on the fast trend, right? The fast trend turned green. It basically told you to get back in the long trade. So on top of that hedge position that you have, which is one long and one short from before that you're carrying, right? Now you opened another long. Now you have two long and one short. Your short is the hedge, right? Okay. So now, but I'm looking at the bars, and the bars are kind of flat. So right here at 11:22, when the color on the fast trend changes or turns green, that's time to get out of a profitable trade. Now, whether the last trade was profitable or not, that's irrelevant, because you have a profitable trade from way before here. You close the one with the biggest profit, because that was, up until now, that was your hedge trade. Now your hedge trade becomes a winner. So this bar, guess what? Now you're flat again, because you took the profit. So far you only have that one hedge trade that you're carrying. Everything else you've been able to get out of, and you got some good some good moves. All right, so now you're getting out of it, right? You get out of it, and before long, the intermediate trend changes as well. It turns to red. What does it mean? That means that you're supposed to be hedged, but you already are hedged. You are hedged. Little more time. So you do not need to open a hedge trade, because you would be, if you open a hedge trade, you would be trading against the master trend. You never do that. Never trade against the master trend, even if the bars are going down, because the master trend also can retrace. So now in just a little while over here, well, this is actually the end of the day, 59. You never open a trade at the end of the day, but if this was not the end of the day, you would get back into a trade right here. But anything within the last 15 minutes or so, I don't care. I don't touch. I don't want to be stuck with a trade overnight, or go into a session when there's no movement. So, but let's just assume that you got into this trade, all right, and you're long. Very shortly after that, the market reverses, and before you go short, you hedge or close a trade that is profitable. Well, let's just assume that there are no trades profitable. Now you have two hedged positions. You have two longs and two shorts, not too far apart, but get this right here. There's a gap down. Looks like with a gap down, looks like the market wants to run. Guess what trade you're opening? A short. And that short will take you all the way to here, 1142. 1142, but your biggest winner is not going to be your last trade. It will be your biggest winner at this point will be one of your hedge trades, one of your previous trades that was at one point a loser. Now you're hedged again. You're hedged. At this point, you would normally hedge if you were short, but you're hedged. You're flat. You have two longs and two short. Also, you monitor at this point. Let's just say that your goal is 3%, and you're trading with a $10,000 account. So you want to make, say, $300 a day. So you add up all those profits that we've made along the way. You keep adding those up. You look at your total score. In other words, your open positions plus your closed positions.
Yeah.
Now, when the total of the two is your profit target, you close them all. You just close that cycle. It's a trading cycle. I call it a trading cycle. From the beginning, I call it close all trades. You don't need those hedges. You made your money. You can close them. Or if you don't, you can do this all day long, every day. So right here on this really, really thin line, guess what? You're hedged. This will not put you in a trade because you're hedged. When you're hedged, you only take signals from the intermediate chart. You close trades on the signals from both charts, from the intermediate and fast. But when you are hedged, you only take trades from the intermediate chart. If you are not hedged, you can take trades from any chart, but you are hedged 2 and 2 at this point until here, enter trade on the arrow, and you will stay in this trade until 1838, when you have a change of color on the fast chart. You get back in at 1350, take profit if you have any at 1359. If you don't have any profit, you will not re-enter on 733 because you're still hedged, unless you've already made your profit and put all the trades away. You clear the slate, start from scratch. Now, one other thing I want to point out. Remember that original hedge trade that we took at the beginning of this long trend, on this uptrend here, way in the beginning when we first started?
Yeah.
Guess what? At this point, when you're entering into the new long trade, all of those trades that you would have had to take a loss on because you would have been stopped out, guess what? All of them are in profit now. Why do people want to get stopped out? So it's like this. You're living in your house, right? And I mean, you're living there. You have to live somewhere, right? But the real estate market it goes up and down, irrespective of you, right? You are nothing, nobody. You don't make any difference to the real estate market. The market goes up and down, and you're living in your house. But the market is down, and you're thinking, damn, this market is down. I better sell this house. That's what people do. I mean, it's absolutely ridiculous. It's still a good house. You still have to live somewhere. That market will turn sooner or later. Just hang on to it. Just hang on to it. It's a hedge trade. But guess what? When the market turned here, that hedge trade became the master trade. And then you entered a new trade. So now you have two trades in profit, as opposed to two trades that you took a loss on, which is what most people would have done. Most people would have exited both of those trades at a loss. I make money on both of them. Now, there's a big difference when you have two trades, when you take a loss on both of them, or whether you make money on both of them.
Yeah.
That's a major, big difference. I prefer to take money on all my trades, make a profit on all my trades. I don't like to lose money on any of the trades. If I close a trade with a loss, it's only as part of a group close because I've reached my target, cleaning the slate. And when I close those, I'm ahead of the game. If I didn't do that, I would have a 100% trade success ratio.